Seven things to consider before placing a trade in 2025. Now, this is what we're going to be talking about in today's video. It's a pleasure having you guys here. Sit back, relax, and watch the video to the end because these are the things that I have been using personally for years. Now, the first thing we're going to look at is what we have right in front of us. Now, this is a popular website known as Forex Factory. So why are we here under Forex Factory? We are here because of the fundamentals, the news. We need to always pay attention. In most of the videos that we have done, we always say, check the news, check the calendar, because you don't want to get caught off guard when a high impact news is released and then you place a trade and then you have whipsaws, slippages, spread increment, and the rest, and then you have losses easily. It should be a thing of avoiding unnecessary losses. So we always say fundamentals, very key, very, very important. You can see for today, December 31st, we don't have much news, of course, because of the holiday period, and probably going into the second week, I would say the second week, the market should resume properly with proper volatility in the market, liquidity in the market, right? So you can check the calendar for today, or you can hit calendar here and then check the calendar for the week. Here we have actually filtered the other types of impacts. We only have the high impact here. You can move forward into the second week. Next week, January 5th to January 11th, and then you have more high impact. So you can see, as we said, January proper, the market is going to come out strong with good volatility in the market. So the first thing is the fundamentals. Check the calendar, check the news. And the second thing, which is very important, and then traders actually use this more than the fundamentals, it is the technicals. And when it comes to the technicals, we are talking about art of trading, ART. The art of trading, what does this mean? It simply means A for area of interest, R for reaction, and then T for trigger. So based on the technical analysis, you need to know the area where you want to enter the market. You need to wait for the reaction. Well, some traders don't wait for the reaction. You could just enter aggressively, but we always advise wait for a reaction there, and then what will be your trigger? So the second thing, art of trading, area of interest, reaction at the area of interest, and your trigger, what you're going to use to enter the market, is the second most important thing. Now, the third thing, you need to also decide, you need to also know the type of trader that you are. You have a lot of people that are swinging, dancing like a pendulum, moving from here to there. They don't know the type of trader that they are. Are you a scalper? Are you a day trader, swing, or position trader? It's very important for you to understand the types of traders, and this would also help you with the type of time frames that you are going to be using. As an example, I normally hear a lot of people that are doing the 9 to 5. They keep on saying this one thing, that they don't have time to trade. But then I always tell them, based on the type of trader that you are, you could trade comfortably, even with your 9 to 5. Move to a higher time frame, which simply means you are not a scalper or you're not even a day trader. You could easily be a swing or position trader. And this gives you ample time. You're not staring at the charts. Very key, very, very important. So the third thing, know the type of trader that you are. Fourth, what is your trading style? These questions are very, very important. These 7 things to consider in 2025 before placing any trade are very, very important. What is your trading style? Are you a breakout trader? Meaning that you wait for the market to break out and then you look for an entry? Or are you a trader that places trades based on the bounce when the market bounces off a particular area? Don't forget our technicals. based on the art of trading, ART. Are you waiting for a bounce off a particular area, or are you waiting for a pullback to a particular area? These things that we're mentioning, you could list them one after the other and see how your trading has been in this year 2024. Did you know the type of trader that you are or you were? Scalper, day, swing, position? Are you using the trading style of breakout? You wait for a breakout of a particular area. Are you waiting for a bounce off a particular area or a pullback to a particular area? Very, very important. These things are very key, and it's always advisable for you to write them down. The next thing we want to talk about, which is number 5, it's in two parts. This is the entry and the exit. Entry and exit. Now you can see how we've been listing them from number 1, the fundamentals. And we always advise that is the first thing you do even when you wake up. Before you go to the technicals, before you go to the chart, number 1, it's advisable. I'm not saying trade the news, but I'm saying pay attention to the news. Know when it's going to be volatile. Know when we're going to have the non-farm payroll, FOMC. Know when there's going to be CPI, some type of high impact news that can, change the direction, change the flow of the market. Very key. So this next thing, number 5, entry and the exit. What are you using to enter the market? If you look at the chart that we have right in front of us, you can see a lot of candles. Are you using candlestick patterns? The popular candlestick patterns that we have are the likes of the pain bar, also known as the hammer. You have the engulfings, you have the dojis, the haramis, and so on, right? So are you using candlestick patterns, or are you even using, it could be chart patterns, it could be like triangles, flags, pennants, head and shoulders, QM, Quasimodo, and so on. So you need to understand your own entry. Make a list of these things. We've talked about the entry now. You could have somewhere written down entry equals to pin bar, hammer, doji, or you could even use the chart patterns, triangle, wedges, and so on. And then for your stop loss and take profit, which is your exit, stop loss and take profit, where are you going to be setting your stop loss? Is it at the other side of the candle that you used to enter? Is it at the other side of that area? Assuming you are buying at a support, are you just going to set it at a random number at the other side of the support, under the support? You need to understand all of these things. They are very, very key, very, very important. And then the take profit. Where are you setting the take profit? Is it based on your risk? Is it based on your stop loss? Assuming your stop loss is 10 pips, will you now say, oh, because my stop loss is 10 pips, my take profit is now going to be 10 pips or 20 pips or 30 pips? I see a lot of traders do that. So you must know, is this what you want to do? Or are you going to be setting take profit based on when you buy at the support, take profit should be at the next area of resistance, or maybe even the higher resistance, meaning that you could have like TP1, TP2, TP3, and so on. You need to understand all of these things. Very key, very, very important. And that is the exit for you based on the stop loss and take profit. The number 6 thing now is risk management. What is your risk management? What are you willing to part away with per trade? This question majorly has to do with your account balance. Once you know your account balance, you now need to ask yourself, do you want to lose? Because I say lose because any trade you take, it is assumed that it is a loss. That assumption is going to help shaping your mind, meaning that you have $1,000 as an example. Are you going to risk $1,000 on your next trade? No, because with that assumption that that trade is more or less a loss, it means that you can easily blow that $1,000 very fast. So you need to understand that the risk management is very, very important. And some might advise, why not use 1% of your account balance, 2% of your account balance per trade, or maybe even combination of your trades for the day, for the week, or whatever. It is for you to understand yourself, understand your your risk limits, meaning that if you lose 1%, how would you feel? Because trust me, I could even say risk lesser than 1%, especially based on your account balance. If your account balance is like $100,000, $1 million, of course, I'm sure at 1% risk, that loss, potential loss, is going to be big, massive, heavy, and you might not like it. So why not reduce it from the 1% to 0.5? Who knows? The choice is yours. So this risk management, money management is very, very important. And it is based on what? It is based on your account balance. Please pay attention to that. That is a lifesaver. And the final thing I'm going to talk about is trade management. How do you manage your trades? If you go through the channel, we've already talked about the different trade management techniques that you can, implement in your trading. First of all, trade management technique is obviously how to manage your trades. You've entered the market. Now, how are you going to manage it? Are you going to do like a trailing stop, meaning that when the market moves in your favor, do you move your stop loss in your favor to lock in profit? You need to understand that. If you've been trading throughout this year, I always say December ending is a good time to look at your trading, reflect on what you did right and what you did wrong. Always have a journal, write things down. And then, of course, these things would help you to improve. So trade management, is it trailing stop? Is it partial close? It moves in your favor. You close part of that profit, you bank some, and then you leave the remaining with the anticipation that's going to run some more in your favor. Now, with all of these things that we have mentioned, from the fundamentals, looking at the calendar, to the technicals, talking about the art of trading, area of interest, reaction, and of course, the trigger of trading, art of trading. We also talked about the type of trader that you are. Are you scalping? Are you doing the day trading style? Are you swinging, or are you a position trader? And then the trading style, are you doing breakout? Are you a breakout trader, bounce or pull back? And then we talked about number 5, the entry and the exit, what you're going to use to enter the market. Is it price action candlestick patterns, or is it the chart patterns, triangles, wedges, flags, pennants, head and shoulders, and the list goes on and on. And then also for your exit, where are you setting your stop loss? Is it just behind the candle that triggers, or behind that area of interest? Or are you just putting it randomly using random figures, right? And then your take profit, where are you setting your take profits? You need to understand all of these parameters. Moving down to the risk management, which is what? Minimizing, maximizing your profits based on risk management, knowing your account balance, and knowing what you want to put into that trade or each trade. And then trade management is the partial close you're implementing, is in trailing stop. All of these things, trust me, once you write them down, it's going to help you to have a plan. You notice we didn't mention trading plan. We've mentioned these 7 things, but once you write these things down, this should be your trading plan for 2025. And then not just writing it down, you also need to follow them religiously. Follow them religiously for your trading plan, and keep records, which is your trading journal. Very key, very important. And then finally, as a bonus, once you follow these things diligently, it is going to help you for your psychology. It's going to help you to trade more or less like a robot. You need to understand these things. Very key, very, very important. And trust me, I have been doing this for years. And if you start to implement them, if you feel you are struggling and you start to implement these things, you should start to see changes very fast in your trading. With that said, I want to say thank you guys for tuning in. Make sure to hit the subscribe button and tune in for more videos, analytical videos, educational videos on the business of trading. Thank you guys. It has indeed been a good day, and Happy New Year in advance.